a lot of times what we were met with was the only investments I hold is equities, and eventually I want to own a home, right? People did not even imagine real estate as an investment asset class, right? People don't even think of real estate that, oh, this is an investment I could hold as well. That trip was crazy for me. In a span of 14 days, I was in 5 cities: San Francisco, Seattle, New York, Boston, DC. 5 cities. I looked at about 120 units in all 5 cities. If anybody was able to afford the down payment for like 20% on any apartment in the city, the rent would easily offset your monthly interest payments, which was like a mere 3% back then. And your rental yields, like for short term, were anywhere between like 15 to 25%.
The Research Labs podcast by Sunday Pajamas.
Welcome, Vidhi, to our incredible podcast. We have been talking for quite some time now. I think I have known you for the last 2 years because of Kevalya. Personally known you for the last, I think, two and a half months now. We have been almost working together on Vaar. It has been very fascinating to kind of learn more about, how you have been thinking. And definitely on today's episode, we'll try to dig deeper into that. And maybe we can also talk about, what you did before that. How about you take some time and tell us what you do and who you are and what you are up to right now.
For the longest time in my life, I've wanted to be this trader, right? I wanted to be this high frequency trader in the stock market. To which end I ended up, pursuing math and econ for my undergrad. Like pursued it with full passion. I ended up doing it. I ended up graduating in math and econ, and went to find a proper Wall Street job at a proprietary trading firm. It was a high testosterone environment. It was a floor full of traders with like 5 screens in front of every person sitting there, with a very apparent kind of gender distribution, which was I was the only girl on the floor. There was one other lady who was an HR, but it was all boys and men around me trading. It was an experience, but what I learned from doing that for over a year was that we were competing in a world that was, for example, trading in the stock market has already evolved so much in its space that like over 80% of the volume that you see is algorithmic. And as a human, I did not think you could possibly compete with a market that is dominated by algorithmic programs and volumes and whatnot. Everything that led me up to there like that was my main trajectory. But everything on the side that I was doing, alongside college, my recreational activities and everything else apart from the main curriculum set me up to do what I am doing today. So for example, back in college, Boston is an expensive city, and my college was in the middle of the city, right, in the best part of town. And I hate commuting, right? I mean, you have to live there as well if you hate commuting, but living there comes at a cost. And I learned to kind of find or hack my way into, living there guilt free, but not, burning a hole through my pockets. And what I did was the next best thing to kind of paying the rent myself was hacking away to, find people to pay my rent. And how I did that was I actually went all out and got a 2 bedroom apartment on the most expensive street of the city, which is Boylston Street, and lived in the 1 bedroom, Airbnb the other bedroom, knowing the proximity to everything that the city has to offer. It was in the middle of everything. The transportation from there was top notch. Universities were like few minutes walk away, like at least the big ones, Northeastern, Berkeley, Harvard, MIT, everything was nearby. Best of the areas were all there, right? So that was like the idea was to be in a place where there was never a lack of demand. Obviously to make sure that the second bedroom was never really empty. Now I Airbnb the next bedroom. My monthly rent on that apartment was $3,200. But can you like make a wild guess on what I made just off of the second bedroom Airbnb? Like make a wild guess.
Around 4,500, 5,000.
Yeah, not even close. You can double that. You can
Wow.
double
So you
that.
made 10 grand
Yeah,
from that
about
room.
about that much. And that was like average occupancy, average time of the year. Come commencement time, right? Like for example, March and April, when a lot of university, it's a student city. So many colleges around, and come commencement time or come game time, right? Red Sox, Celtics, Bruins, all of these teams could be playing in the city come game time, or if there's like a huge medical conference in the city, because it is the mecca of medical research. During these times, it is clear to anybody that the city did not have enough beds to kind of accommodate the number of people that came into the city. There aren't enough beds. Obviously, like the nightly rates are going to spike, but to what extent? I saw it firsthand, and my pre-war small apartment, 80 square foot room could yield about 600 to $650 a night, right? During times like those, weekends like those, or weeks like those. Come good months, this one bedroom could yield anywhere between like 10 to 15 grand, right? Now, looking at that potential and like the interest rates back then, which were sub 3%, I recognized that, if anybody was able to afford the down payment for like 20% on any apartment in the city, the rent would easily offset your monthly interest payments, which was like a mere 3% back then. And your rental yields, like for short term, were anywhere between like 15 to 25%. But, even if you looked at the longer term leases, which were like year long leases and stuff, that would have still been anywhere between 6 to 9%, right? And a 3% interest rate would, like, looking at that and doing that cross connection just made me drool. All I wanted to be was a landlord. After that point, the only thing I wanted to be was a landlord. It's a simple dream. I don't want to do much else. No rocket science. I hadn't recognized that yet. I always wanted to, like own assets in Boston. That was it. That was the point to which I had, understood what I wanted. I was still, very aggressively pursuing my dream to become a trader alongside all of this. So after graduating, like I said, I did end up doing that job. Taught me a lot, learned a lot, realized it wasn't for humans. Kind of took some time to, think about what I want to do next. What I wanted to do next back in that time was to do my master's, like become more specialized. And I applied to like one university, which was Georgetown, to pursue financial economics, a master's in financial economics. And between applying there and the session starting, I had a few months to spare, during which I did come back to India to spend some time home. I'd been away for 6 years, I presume. Yeah, so I just came back to spend some time, and the fates turned. COVID happened, right? I came back in November, March happened, COVID happened, and the whole world kind of took a turn that nobody knew how to deal with. The session was due to begin in September. That went online because it was the first time, universities were doing an online course. They did not know how to adjust for time or how to even teach online, right? And what I was setting out to do was super pure math, at least for the first semester, a lot of foundational courses. And, learning those things at 3 in the morning local time and, trying to pay attention to pure math at 3 in the morning was a task. I did the one semester and realized that, I'm paying too much money, paying too little attention, and probably learning not much. So I decided to drop. I took a drop because the next semester was also going to be online, and I thought I did not want to do it that way. Which is when I had time on my hands now. What to do? And I started working. I started working here in my family office in India, wherein I started overseeing a fund that we had set up here. It was, we built it. we built it in a way that, like, from scratch, right? We started, I collecting a lot of data on the options side of the market, the F&O piece of the market, cleaning it out to see if we could like find something there. Did a lot of testing. It worked out pretty well, at least in the time that we were executing it and updating it, and like taking care of the model that we were building out. But at the same time, in my office, I started seeing, like people investing in warehouses and managing warehouse leases and deals and, other real estate transactions. Those were also things I got exposed to. And looking at those yields here, right, I realized that, people in the US talked about a 5% or a 6% yield or a 7% yield on a residential asset, wherein comparatively I was seeing a 12% yield for a 14-year period, which had a built-in clause wherein, landlords, we could hike, the rents by 20% every 2 years, right? With a clause that was built in for a term that was 15 years and starting, yield of 12%. I, I, I couldn't first comprehend that this was real. And when I did, it occurred to me that if this is happening in India, right? And the areas that we're looking at are fairly prime and, fairly stable and, poised for growth. I thought that, this was an opportunity or information that was not even, like common to the rest of the world, right? In the US, a 6% interest rate or 6% yield is like, oh my God, this is so good, right? In India, if I went to somebody and told them that, oh, I have a proposition that's going to make you 6%, they're going to show me out of their office instantly. The risk-free returns in all of these countries, and these are just two countries, right, that I've been exposed to. The risk-free returns that, real estate has the ability to offer in the different countries is like an arbitrage. It's like a map of arbitrage, right? For somebody sitting in the US being able to invest here in India, first, even if you have this information, you don't have the infrastructure to be able to do this, even if you were an institutional investor. What about the smaller guy? What about the smaller guy, right? Real estate, like is daunting from the start, being the large ticket size item that it is, that people don't even like look towards it. But with this new information, even if they knew about it, it's difficult to access, even if you were an institution, right? So there's a lot of barriers, is what I realized in this particular asset class. Barriers on all levels, be it financial, be it regulatory, be it cross country, be it just like information. Information is not clean. Information is not documented in a standardized manner. There's a lot of things. And I realized that, this is something that needs to change and will change. We're progressing in the world on all fronts. Real estate is easily by far the largest asset class on planet Earth. How could it be left behind? So, there's a lot of advancements that are happening in this space already. We're just working on building a product where understanding it and accessing it becomes slightly better, slightly easier, and less daunting. That was the point where I, started thinking, like it all came together, right? I saw these
Right.
things, I did these things in college, renting this apartment and whatnot. I'm seeing yields here and now. I see potential everywhere, don't know how to stitch it up yet. And COVID was the time I found, like some downtime, I would say.
You were able to like think things through.
Think things through, connect the dots, make sense of the whole picture. There's a lot of different pieces of information everywhere. But like, how does it all come together, right? Now, okay, you might have conviction and okay, I think this can come together so beautifully because I have so much information and it's all so logical, right? But then when you start to like speak using words to somebody else, it's a whole different ballgame. Do they get it?
What do you mean by that?
What I mean by that is that your opinions and your ideas and your conviction gets shaped through your experiences that are super personal and you've seen them firsthand, hence the conviction.
Right.
lot of times the people that you speak with cannot possibly have that conviction given that all they have is your word for it. And what good is your word, right, to anybody? So, I started working on this, alongside my trading activity. I was managing a fund here in the Indian markets. And what I started to do was like running numbers. I got in touch with a lot of brokers across cities in the US. So, like Seattle, DC, San Francisco, Palo Alto, Philadelphia, Boston. I started getting in touch with these brokers and asking them what kind of inventory they had on the market. And this was also the time when interest rates were rising extremely sharply, I would say, like extremely quickly. The effective interest rates went from being less than 3% to effectively about 7% and higher, right? And that was the steepest rise interest rates had seen in multiple decades, actually.
Right.
So, the buyer activity had really died down, which is why it was all the more interesting to kind of have ground data in these cities about, what kind of buying activities are you seeing? What kind of seller's market is it, right? And I started just like building up a lot of data and information for myself. Uh, this was just a part of my research, like just to see, and most of it was just curiosity driven. It was not to a particular end. And when I started seeing data that was retail in nature versus data that was institutional in nature, I saw a very, very wide disparity or a very wide difference in the buying activity, right? The kind of money that was flowing in from the retail side had nearly stopped. People could not afford 7% interest rates. It's literally, the cost of your money doubled, right? More than doubled. That's a hard pill to swallow when it happens so quickly.
What was it before that? It was like 2, 3?
It was about 2.5, like sub 3%.
Right.
2.5, 2.75. It was sub 3 though. But it was not just the interest rate, the high interest rate. It was also the speed at which it was raised. All of it ended up happening in about a year and a half. Imagine the cost of money doubling in a year and a half, while a layperson does not bear the impact of that quite as directly. As an investor or as a business owner, the economy would see repercussions and very strong ones at that, and quite immediately. Which is why it wasn't the talk of the town, but it was kind of shifting trends quite a bit. And looking at the institutional numbers, I realized that US home buying was completely tilted. There were 10 million home buyers on the market, and the US home market was short supplied by 10 million homes. But at the same time, everything that there was being lapped up by institutions, right? People that were out to buy obviously couldn't afford at that time, so they continued renting, which created a further upward pressure on the rents, right? Which made investing in real estate a more lucrative opportunity. And institutional investors can spot that, right? Home buying was a thing. It's still a thing. Higher rents are yielding better, so it's even more lucrative. All the dynamics were shifting in a way. It was painful to see, but it was something. It was a problem. It is a problem. Still is something that needs addressing. But yeah, that's the kind of trends we started seeing, which kind of helped us build a lot of conviction into solving for this even more.
You mentioned managing a fund for which you were doing all this research. How does management of a fund work? Like, what are the kind of activities that you have to do? Is it a lot of research? Is it a lot of math? If you could give a picture.
The fund I was managing was an equities fund. We were investing in the Indian equities market. What I was doing on the real estate side of things was, and aside from all of that, it was simply because I was exposed to the numbers and the yields and the kind of market conditions here in India and in the US. So it was that research piece was separate from the fund. The fund I was managing here was an option strategy fund in the Indian equities market. Well, there's a few pieces in doing that. What I was personally involved in was cleaning of the data. We were constantly updating, collecting, cleaning data, making sure that the signals that we were hoping to get from the system, the data system that we were building, we had not hard coded it. What we had done, it was fairly new as well, right? We had like data for the last 5 and 10 years, depending on how long the particular stock had been trading in the F&O market. What I was responsible for doing was making sure that the data was clean, accurate, and at the same time, adjusting for the kind of parameters in a way that the current market volatility matched with points in time of the data that we were referring to. So this particular time in the market that we were trading was highly volatile given COVID and given so many policy changes across the world. Simply looking at data from the past would not cut it because it couldn't relate to the volatility conditions that were in the market, right? So, like adding these parameters and layers on top of just the clean data to make sure that it was actually representative of what the kind of times we're in that moment. So a lot of it was driven by, research, reading a bunch of things about like a lot of like at the base of it, if you were to like dumb it down for somebody, we were kind of tending towards mean reversion of the pricing of, any security that gets traded on the market. But at the same time, we were making mean reversion a bit more sophisticated in the best way we knew how. So I was responsible for, this aspect of the business, but also for the execution because we weren't confident enough to automate execution of trades. So whenever this system we'd built was throwing out or, pointing towards certain trades, we would take those into consideration individually and personally and then decide whether we wanted to like actually make that trade or not. So I was also responsible for execution. Our universe was small. We did not like the Indian stock market probably has like 5,000 different stocks. We had narrowed our universe down to like 125. First, not all of those 5,000 trade in the futures and options market. The F&O market alone would probably not be bigger than like 500 stocks. And we had kind of narrowed it down even further from that to about 125, 130 stocks. So that was all we were looking at.
What you are saying is these are the stocks you ended up looking at, right? Could you maybe share how do you start the process of research, in the sense when you set up a fund, do you have a thesis that you want to go after, or is there a theme that you are trying to emulate in your investments? Like, how does that work?
So it all started because we thought that the smart money in the stock market first went to the futures and options market because it was a market that provided for higher liquidity. And so our idea was that institutional money first goes to the F&O market. So that is where we want to source our data. You asked for a broader theme. The broader theme, if I was to put it simply, was every stock trades in a particular way. All stocks have a fundamental characteristic in the way they trade. For example, if you looked at Reliance, right, its own options chain, you would always see that, at the money options for Reliance are about 0.5%, because Reliance as a stock is not very volatile, right? But at the same time, if you looked at an Adani Enterprise, for example, another Indian stock, you would see that its at the money option trades at about 2.5 to 3% of its, at the money strike price. What this means is that historically, the at the money has traded. Okay, historically at X volatility, this particular stock trades at 2.5%. You would know if something is off today, right? If like the past 10 years of data suggests X, and you see today that it is significantly higher or significantly lower, the market will correct for it. The market will slowly but surely correct for it. So then there is a trade opportunity, because if history suggests that it's at 2.5% and today it's at 6%, you either, go out and find out why. And if you can't find a good reason, for example, if there is no earnings, if there is no like event happening in the particular realm or space or the company, you would know that this is mispriced. So we were essentially trying to find mispricing in the options prices and finding trades where they will like go on and correct themselves and make that money, that difference, essentially.
Right.
So that is where it started. And to that end is where we started collecting all this data.
How long is this or how much work is this to figure this out?
So getting data and cleaning data is a longish process. When I started to even like test for this, it was just like I started like with 10 scripts to see if this even holds any water. That probably took me about a week, to get all that data and to kind of clean it up and see if it made any sense at all, if it was even worth pursuing. But when patterns or trends started to make sense, we expanded and expanded, like ended up at like a stock universe of 125 stocks. All of that data and all of those systems took about 6 months to set up. We are actually brokers ourselves in the equities market here in India. So we do have a direct line with the NSE. So we also had certain systemic advantages, in that sense, where we could have access to like quick trades and direct lines and like lower costs of execution, lower brokerages.
I was very curious to kind of ask you in the very beginning. You were describing that you had to take a lot of math courses, and I was curious to know, were you always interested in math when even before college in school, or it kind of grew as you became older?
Yeah, I had
Because
zero
what you
interest.
described is that you were literally studying math for like years, right? That was your college course essentially.
Not my undergrad, not that much, but it was pretty heavy in math. I did like my major was math and econ, and econ, eventually also gets pretty mathy. But all of that was not that big a deal. Come masters was when I realized that the heat and intensity of math in that one semester, studying at 3 in the morning. But to answer your question, no, I really hated math back in the day, back in school. I understood, the applications. Like I understood math, the extent of its applications in the real world. So for example, if you were referring to scenarios, like applied scenarios, right? If you're in the office and you're like trying to calculate like certain costs of your money, or whether this transaction is worth doing or not, and like calculating those applied math concepts and calculating interest and what it compounds to, like those applied things were things I understood from the beginning because it's something I had seen and grown up with. But classroom math, I really did not like it. But I did realize early on, which is why I decided to stick along and pursue it, was because it was important. It was important in the industry that I wanted to kind of make a dent in. Obviously ended up,
And where do you think that came from? You mentioned that you wanted to be a trader.
I did. Where did it come, like where did my will to become a trader come from? Is that what you asked?
Yeah, like how did you decide that you know what I'm going to do with my life? I am going to go out there and become a trader.
Yeah, the origin story of that is not very clear, but it is something that I had
Right.
seen a
It's
lot
not
growing
really-
up.
right.
I just felt that at the end of the day, a lot of things that, like professionally speaking, the driver is money, right? A lot of times. I'm not saying it's true for everyone and everything, but a lot of times in your professional career, your driver is money. You want to like get somewhere, earn some X amount, be able to afford X. Okay, you're doing something and to earn X. What was great about trading was that you were only dealing with money itself. Everything that you're doing is pure money deal, right? It is as brute as, at the end of the day, you can really calculate what you made and what you did make and what you lost and what you did lose. And the simplicity of that was something that just made sense, like, okay, at the end of the day, if everything is for money, why not just like deal in money? It's thrilling, to see yourself kind of go through those highs and lows on days you've done like really well. There are like, you can, it's literally as short as a day, right? You could know that, okay, today I did well, and you could know that today I did not do well. And that sort of, black and white, and that sort of accountability towards money and your the success of your day, it's addictive. It's not vague, and which is what I like about it.
And what do you think that you also mentioned that you were on the trader floor with all the people working, I would say, so close to the most intense financial system
Yeah,
there is, and you were directly dealing in money with money at all times.
right.
Does it change you, or does it, like, change your perspective from a psychological standpoint about how you look at it now compared to when you, let's say, meet somebody who might not be doing that as a profession?
I don't know if it changes things psychologically like that in terms of like the external effects of it with other people, but the one thing you end up doing in your head is the kind of math that, it really does directly impact you and your mood for the day and your like way of going about life. Because say you've had a bad week, you know exactly what you've lost. If you had a good week, you know exactly what you've gained, right? And that, unless you have like a big nest egg and you're doing this as a business now, that would not probably change your day to days in your life. But when I was doing it, I was a fresher. I was fresh out of college. It's not like I had, a bunch of money stashed away. I was doing what I was doing with everything I had. So I'm not sure if that was your question, but it is surely humbling, the kind of environment I was in. While the trading floor is all sorts of chaos, the fines that we had on the floor were that, if out of aggression you threw a mouse and you broke a mouse, you pay $70. If you blew up a screen because you punched it, you pay $500. Because it was like this.
People punch screens
Yeah, like people would
all the time,
throw keyboards, people would like throw mugs, people would like yell swears, and all of that was allowed for a fine.
right?
Right? If you're doing it, you have to pay the fine. You could do it as long as you want to pay the fine, and that was it. But like at lunchtime when you step out, right? Who are the neighbors in your office buildings? Who are the people that you're surrounded by when you're going for lunch? When you're going to grab that sandwich across the street, you're probably rubbing shoulders with the likes of like the greatest investment bankers, right? Because all the headquarters are there. New York Stock Exchange was like 3 blocks away. The Federal Reserve was like a 10-minute walk away.
Right.
From where I was sitting, if you drew a half-mile radius and drew a circle with that half-mile radius, you cannot calculate the kind of wealth there is in that area.
Right.
So what you were surrounded by was absolutely massive and daunting. And if anybody ever took the time to like sit down and just like take it in, away from the hustle and bustle, and just like sit down in the middle of the street and just see what's happening, right? There's so much. Like sit down with that smoke and calm your mind and just like take it in for a second, and it will weigh on you like nothing ever has. And like this, the one thing that I can tell you was like, okay, for example, if you even wanted to begin to calculate the amount of material wealth that was there in that area, the Federal Reserve of New York has a gold vault that is underground, and at any given point in time, that vault stores, I think, 600 billion with a B dollars worth of gold at any given point in time, right? So you're walking on gold, you're breathing that air, you're doing all of that. Oh, I lived on 2 Gold Street. My residential address is 2 Gold Street. I was neighbors with the Federal Reserve. It was called 2 Gold Street because the gold vault was under that building. So, you're literally waking up and pooping on gold, you know, if you were to put it like that.
Essentially. Yeah.
Like that's what I'm trying to say. The amount of wealth, talent, people that drive it, right? You can't undermine the people that are driving this sort of wealth. All of it. All of it. So it does humble you, and nothing will ever impress you ever again. Nothing else, in my opinion, to me, is as impressive as where I was and what I was surrounded by. I don't think there's another piece of land on the planet that packs that kind of talent and wealth.
You did that. You were a trader because you don't like math as much. Somewhat you like applied math, from what I gather. And you came back to India and you were managing a fund, and we slightly covered what that entails. I have so many questions about that. However, I think I would like to also ask you about how did all of that kind of lead to you conceptualizing VAR, or the idea behind that, and like how did that start, and what was like the first or the second intuition when you thought that okay, this might be a thing actually?
A lot of factors played into it. I don't remember the order of things anymore, but it was everything was happening together all at once. So, like I said, I was updating myself with a lot of real estate data in the US, specifically the housing market, the the rental data, area-wise rental data of different cities, and the kind of demand that these were seeing, the kind of vacancy rates that there were in those cities. And all I saw was promise. It was it was only going to get better from there. Like that's a whole different discussion. While I was doing that, um, I started realizing that psychologically, my age group, right? Or like an age group that is above us. So like the age group of people that were, graduating at that time, like 2 years ago, which was age group of 22 year olds to like 35-year-olds, right? Which is like the prime working population of the world, right? And that entire population is bigger than it ever was, is fresh out of trauma, a global standstill like COVID, emotional trauma, financial trauma, businesses going bankrupt. Everybody had seen everything that they possibly could. There was threat of war. There was inflation, massive inflation post COVID. All of these different setbacks and traumas were fresh in people's minds. That meant that the awareness for security, right? Security became an aspect, right? Like the people my age, people your age, if all of us started understanding investments and the role of financial security better than ever before. We understood that emergencies can happen, traumas can happen. And the only thing that will sustain you in times like those is financial security, right? So it became a really big piece for the entire working population, right? And for better or for worse, the whole thing kind of pushed people into taking investments more seriously. Savings had become a thing, have become a thing. Because when you look at the US debt numbers racking up, it really is, it makes me nervous what's going to end up happening. But at the same time, when you look at the data for this particular age band, 65% of this age group invests, holds investments directly or indirectly, right? Which means that we're smarter than the people that came before us, and we're smarter than the people that are coming after us, because the people that are coming after us haven't felt the heat of what happened that to that extent because they were younger. I'm referring to my younger siblings or whatever, right? Like the kind of people you see around you. So the importance of financial security is now felt better than ever, which is also leading to a higher demand for investments, right? Now, when that happens, what is the one thing you turn to? What is like this one thing that is real for sure? What is this one thing that is tangible, real, and an absolute necessity? We realized this during COVID. It's a home, right? Your work could become remote. Your office could, your working conditions could become hybrid, right? Where you don't have to really go into the office. But you really can't swap out a roof over your head to sleep under, right? You like that can never have a different kind of you can't sleep on the cloud. You can't you can't do all those things. So the one thing that was like very clear, which was also demonstrated by the US housing numbers and institutional buying numbers, was that residential real estate is the only truth. It's the only thing that's going to stay, and it was worth the pursuit, right? Now, there's two things about that, right? The fact that it is so important makes it a great investment opportunity, right? Because you can vouch for the demand, you can vouch for its growth to a certain extent. if not now, later, right? Like real estate doesn't really, like, it's there. It's finite and it's there. Going back to the change in people's psychology, and seeing it firsthand and seeing the numbers support it, I realized that investments were in a higher demand, security was in a higher demand. So what is something that one can offer, right? And which is what kind of led me to slowly believe that the one thing that one can truly rely on is really real estate. I could start a fund and say that I'm going to do so well in the equities market, and my returns are going to be phenomenal, and we're going to beat everyone out of the park with this new strategy. But that's what every new fund says, right? But making this asset class investable and accessible offers the kind of security and spine to your portfolio that no other asset class really can. It's tangible, it's not, the value is not really derived as a figment of, the market's imagination. I started exploring this space. The numbers obviously made sense, like we talked about. But at the same time, the limitation was high barriers to entry, right? A normal person, a student, a fresher, a young professional would have a really difficult time accessing this asset class given that it is a large ticket size item. So then the problem solving piece was evident to us. It became very clear what we needed to problem solve for. I'm not saying that we invented the wheel. I'm not saying there was nothing before we came into being. But you know, creating that one piece out of all the information we have is what we think we're doing pretty well. The thesis that drives us is also fairly bulletproof. The data that we back it with is also pretty solid. And the kind of product that we then want to build is be the Robinhood of real estate. And this is high praise for Robinhood because they've done it very well for the equities market. Investing, for example, was never really fun, using, Schwab or TD Ameritrade or E-Trade or whatever, those platforms made it look daunting. Come Robinhood, enter Robinhood, everybody's doing it. Everybody's on their phones, like swiping up to kind of place an order to invest with those like rockets flying around. And so investing had become like gamified, but I don't want to like use the kind of associations we have with that word today. But like it had become so easy and so accessible and so not scary. We want to do the same for real estate, building a portfolio of real estate, earning that rental income on your capital, not seeing real estate as a thing of the future, like, oh, we don't have the money for it right now. When I grow older, I will own a home. It should not be like that today. We have the systems, we have the finesse and technology, and all of it, if it came together as well as I imagine it will be, it will. It should change the face of real estate investments altogether. We're actually thinking that this is a two-part problem. It's not just the technology. It's also a very big psychological barrier that we're trying to break through, is because we've done a lot of primary research on college campuses, like, spending days at Harvard, spending days at MIT, Northeastern, and talking to students and talking to grad students and, like hearing what they think about real estate. And a lot of times what we were met with was that, oh, yeah, right now the only investments I hold is equities, and, eventually I want to own a home, right? People did not even imagine real estate as an investment asset class, right? People don't even think of real estate that, oh, this is an investment I could hold as well. To them, it's just that, oh, I will own a home eventually. So we're also like trying to get through a lot of that, but it is a lot easier. I've realized now that investments and real estate is taken more and more seriously given the kind of paradigm shifts, right? You see real estate headlines so much more frequently now than you used to before COVID. So the awareness is for sure increasing. There's momentum in this space. People are talking about it more and more. And I think it's just like, you know, when the tides rise, all the boats rise with it. And I think we're just a boat in the space, and I think the whole tide is on the rise.
We have been talking a lot about how to build this platform for users. And a very big part of, I would say, getting this platform up and running so that we can launch is the compliance side of things. Could
Right.
you maybe share, how difficult or how challenging that process has been? Maybe you can start from the start where when you first were trying to research how many compliance would be required, and then how has that journey been so far?
I'm still not sure I know all the compliances that there are, but but then again, I do have a very big chart paper in front of me that is listing those things down. So it's always in front of me. But right, so the compliance piece of this thing is something that we actually take very seriously because we are dealing with retail investors after all, people that have limited capital, limited resources, and we take that responsibility very, very seriously. We are complying with the SEC on one front, we're complying with FINRA on one front, to different ends, right? To make sure that we are healthy in terms of what we're offering and in terms of the kind of people that engage with us on our platform. It's a two-way road, right? While we want to make sure that we're offering the best to people at large, we also want to make sure that there are no bad actors within our system that use this platform. So the compliance is actually a multi-front thing that we're dealing with. I don't think you're interested in knowing about what these are called, like the different regulations and whatnot. But
No, go on.
one thing that we will comply with is Regulation A, which is essentially an SEC regulation for when you're offering securities to retail investors, a smaller investor, right? Somebody that is not an HNI or a UHNI. In the terminology of compliance, it's called accredited investors and unaccredited investors. Retail is easier to understand, but that, and then there's Reg CF, and then as far as complying with FINRA goes, we want to make sure that the people that are onboarding on our platform are KYC checked, they are AML checked, anti-money laundering and know your customer, all that. So what we're trying to do on the compliance front is fairly bookish in nature. It's just a lot. It's extensive, but it's bookish. It's not gray. While I would say that the space is seeing certain changes because all these alternative investment platforms are kind of cropping up in the space. It's all to good end, I would say. It's all to like make the system more and more healthy. And I feel that the more strict these systems are, the better, so that there isn't a low barrier to entry in the space, and so you don't have bad actors as business owners in the space. So I think stricter compliances are always to good ends, while they are like they make the space high barrier to entry space, but it's worth it because you don't want somebody coming in and duping the smaller guy of their savings and whatnot. That's never pretty. Yeah, it's extensive, but it's pretty straightforward. I think execution of those compliances is also expensive given the legal prowess you have to kind of deploy and the kind of fees that gets paid towards that. But it's all to good end, I would say.
Apart from that, what has been, so compliance definitely is one part of the whole system. What else, according to you, is there to what we're trying to build right now, apart from the app itself?
Yeah, I think the biggest piece is the psychological piece that I spoke about earlier. Communication, marketing, and marketing the product. Like I hate using the word marketing, but like reaching out to your potential users in a way that they can relate. real estate has got a bad rap to it over time, given the misdealings and the kind of scams and scandals you hear about it, and the kind of way people pursue you like brokers, right? They've got a bad rap to themselves by dealing in a particular way. But today, in a world where we're like so driven with technology, all of that is easy to put behind. All of that is easy to solve for, right? And yes, it's a large investment item, but it need not be like that. Like the general awareness that we're trying to build around the space and around the asset class is, I feel, the most important and also the most challenging piece of what we're trying to do. I think doing that effectively, communicating that effectively, so that your potential audience is able to relate to what you're trying to say and actually understand, is the biggest thing for us. And I personally really do not believe in selling VAR as a product. I don't want to say, hey, we're building this platform, we're so great, use this platform, we do this, we do that. I really hate talking about the product. I really want to talk about why this space, why is this investment worth it? Why is real estate as an asset class worth considering? And if you understand that thesis, and if that sits well with your own investment thesis, then you might use VAR. Or you could go and do it directly in another way. No problem, right? But we want to try and communicate why this asset class even. I don't think that gets said enough. I don't think that gets said enough to the retail investors out there, which is why people in our age group don't even consider it as an investment, right? So I think that gap in information is what needs to get filled here, and that's what we want to do in terms of you know talking about us as a company. We don't want to promote a product at all. Actually, that's really boring.
And what do you think is like the perception right now about real estate? I think we have been talking to quite a few people at this point.
Yeah, yeah. So, the perception about real estate is really interesting in the sense that it's very split. Like I said, the headlines are like really doing a bad job of portraying what it is to be in real estate because, for example, the headline would say the Chinese real estate market has crashed, right? And if Bloomberg is saying something like that, right? And it has a wide reach. Most people just like build a perception based off of the headlines without going any deeper. But if you went and looked beyond these headlines, right? For example, the US real like New York City real estate market in a turmoil. But what is in a turmoil really? It is the office buildings, it is the commercial real estate that is suffering a little bit, but that's not the case for residential real estate. There's a very big divide in the way people perceive real estate simply because I have this conspiracy theory. I don't know if it's any true or if it has any, shred of truth to it. But I just feel that institutions want to keep retail investment and retail interest away from real estate so they can kind of own and control the whole space. Because one thing is a fact that it is all important, it is ever growing, and it is evergreen in terms of demand. And the less retail investors know about it, the better for institutions because less competition in the space. And which is why I think there's all this eye washing, and which is why I think the smaller guy like you and I is always going to be at a disadvantage when it comes to dealing in real estate. And I think that has gone a long way in kind of penetrating people's psychology about real estate, which is exactly what we're trying to break because you know the truest truth is in the numbers, right? Numbers don't lie. Your narrative can, your words can paint a picture that isn't quite accurate, but numbers won't lie. If there's $100 apartment that makes $10 in rent per year, it only means one thing: it yields 10%. It means nothing else. And by telling that story easily through numbers, we want to kind of break that psychological barrier in people and make them consider this asset class as an investment opportunity.
The example you gave, if a property is $100, it's making $10. There is a 10% yield every year. When I think of real estate, I think of a lot many more numbers than that. For example, maintenance cost, then things break down all the time, you have to fix it. Then there is a lot of services that are required to maintain the property the way it is.
Yeah.
So if you had to, let's say, give like a framework as to what numbers to keep in mind, and like a template that defines that, okay, this is a good real estate residential property to invest in,
Right.
how would you describe that kind of a template? And if you can, like, be as technical and number oriented as you can.
I actually do believe in taking the macro approach first. When you go out looking for a residential property, the first thing I would look at is what surrounds it. What kind of businesses are around there? What kind of schools are around there? What kind of infrastructure is around there? Because that is the only thing that will bleed into the demand for that particular asset, right? So, for example, if you talk about Boston, it's a very small city. It has the ocean on one side, and so it only has like three sides to grow, right? It's a city that is home to a lot of industries that you can't just uproot and move to another place, right? It is universities, right? You can't like uproot a university and move it. It is these multi-billion-dollar, tens of billions of dollars of medical research equipment, medical research facilities, hospitals that you can't just like uproot and move. You can't take the Celtics and the Red Sox stadiums away and move to Texas, right? Now, if the city is full of persistent businesses that have done well over the years, that will continue to do well. Education is not going out of fashion, medical research not going out of fashion, sports never leaving the social fabric of any country. These kind of things, right? Makes it makes the city power packed. Now, once I've analyzed what it houses, it tells me that the demand is going to be persistent, right? Then I start looking at the assets within it. You look at the residential real estate, you also start by looking at like the neighborhood things. Is it safe? Is it well connected? Are there bus routes? Are there train routes? How far is it from the airport? And that is all of those things are what surrounds that particular asset. Now you go on to look at the asset itself, right? If it's a condo, is the building maintaining healthy reserves for maintenance? Is it owner occupied or is it tenant occupied? That will tell you a lot about the maintenance. Is there in-house maintenance? When were the last checks done? The checks for your elevator, for example. When an elevator breaks down, if it does break down, it could be a cost as high as $2 million, right? And if you are an owner in that building, you might have to pitch into that cost, right? To like get it up and running again. So when were these checks last done? You want to make sure that, they were done in the last couple of years so that, you're not anticipating one of these things to happen as soon as you buy, because these are just money pits. Um, if these checks happen and, things are not in the right conditions, in the right condition, you could end up like really denting your yield for that year or like a couple of years, because these are large expenses that you will have to bear being the owner of that condo. So, from looking at the city to looking at the neighborhood, the externals of the asset to the internals of that entire asset, right? That condo building, for example. We're talking about condos because you don't really have single family homes, not that many anyways in Boston. And since we were like talking about Boston as an example, you would want to look at condo finances. The next thing you would want to like, okay, now if everything checks out, you would start your negotiations with a seller. Um, and you would do your research about what the neighboring deals that have happened in the past couple of months look like. What kind of negotiation power do you have? What kind of discounts could you negotiate? 2%, 2.5%, 5%, whatever that might be. Um, the major costs of owning a home, the monthly costs of owning a home, are your homeowners association fees, your insurance costs, your tax. Maintenance, I would say, is miscellaneous. So you always want to have like a piece of your rent kind of set aside in a pool that is collecting for a rainy day if the plumbing failed or if the roof fell off. I don't know, anything. So those are the kind of things that you want to keep in mind. Um, the other costs that you want to make sure you're not overlooking are your closing costs, right? For example, Massachusetts is a state that requires a lawyer's presence in the middle of the buyer and the seller. It's an attorney state. It's called an attorney state. So those things also add to costs. Your selling costs are high because when you're selling, you're also covering for the brokerage of the buyer. So that doubles your brokerage. You want to make sure you're not ignoring those things again. One thing I think you really should want to negotiate is for a platform like ours, we would want the payment terms to be set a particular way so that, like, now this is getting technical for our business. When we're fractionalizing, we want to be able to kind of upfront the margin cost to the seller and then, be able to buy like 60 days of payment terms so we can go on and raise on the platform for the remainder of the money and be able to like furnish that sum eventually to the seller without actually paying out of our own pockets up front. Being calculative of of these things in general, I would say, is what will help you navigate surprise expenses. Surprise expenses can be super heavy, can really hurt the yields in real estate. So, so yeah, dealing with experienced brokers is one thing that you can do for yourself from the start because they've seen deals happen. They've seen what makes them fall apart, and that kind of experience only comes from the field work that they have under their belts. So yeah, that might be the first thing you want to do for yourself, dealing with an experienced broker, at least for a first few
And if
deals. Yeah.
someone is, let's say, getting started for the first time, how, like, what is like a good way to educate oneself as to, yeah, about this whole process? Because this sounds like a extensive process. I think it is extensive if you are trying to do it on your own than just going out there and getting it done.
I think the best way would still be to kind of just go out and look at units. Just like get a broker for yourself, go out on the field, like go out in the city and start looking at different units. Because the kind of conversations you then have with your broker and the seller's broker, you would learn how to ask those questions, what to look for, what not to look for. You know, this one time I was with my broker, one of the first times I was like going out looking at apartments. She took me to the basement of the building. I asked her, like, why are you taking me to the basement of the building? It's like the condition of the basement tells you how well the building is maintained, right? Everything on the front could look great, and it's easy to keep up with. The appearances are easy to maintain. But if you know that the basement is well kept, where the boilers are, and where and if that part of the building is clean, the maintenance is doing a good job. She always looks at the basements of the buildings, and that is something you really can't read on the internet. So I think if you were a beginner, just like get you a broker and start looking at units. Like start looking at as many different kind of units as you can and meeting with these people and having these conversations and learn from the line of questioning that they have between them. I think practical and in-person activities like such. I don't think you can learn much about real estate sitting at home with a laptop.
And when did you actually go and go with your broker to check the property? When was this?
In this particular example was 2022 November 2022. So
Right.
that was a crazy trip for
And
me.
how
It was,
how was your experience? Yeah.
how was my experience looking at these units?
Right.
That
Yeah.
yeah, that trip was crazy for me. In a span of 14 days, I was in 5 cities: San Francisco, Seattle, New York, Boston, DC. 5 cities. I looked at about 120 units in all 5 cities.
Wow.
I was overloaded with information. I think I learned so much. It became very clear to me the kind of markets I wanted to go after, the kind of assets I wanted to get into, like right off the bat, like in the beginning. A lot of things became clear to me in that trip. It's difficult to calculate the kind of value that was derived from it, from this whole activity, but on an intuitive level, I know better now than ever before. So it was worth it. It's difficult to like explain, but yeah.
When you're trying to do something like this or you embark on a trip like this, you have some expectations, ideas as to these are the kind of things I hope I end up finding out about what I'm trying to find out. And so, what was that before you started doing this trip? And what do you think were your conclusions after the trip?
So that trip was the first time I was doing this activity. Um, I was hoping to like document everything and take notes for everything I learned, and I wanted to be the studious person and like come out with this clear grid of what it is that I want and what it is that I want to look at and all of that. Um, I did not think it was going to be a fun experience. I think it was going to be something that I have to do because of like I don't know why. I just did not think it would be like fun going around the town with a random person. But when I was, doing what we were doing, visiting all these different apartments, it's very tiring. It's very tiring because it's a pain to kind of go around in a car across the town, finding parking everywhere you're going. Sometimes the other broker is delayed, sometimes they're running late, sometimes you can't find the key, sometimes someone cancels last minute, so it's very stressful like that. In doing all of this, the amount of time I spent with all these different brokers in these different cities, I learned, for example, you're just like standing under a building waiting for this other person who's like late by 10 minutes. The kind of conversations you strike with the other person at that time is what tells you is what teaches you most actually, because it's not scripted. It's not scripted at all, right? um, Even for a broker, I think the whole showing is very scripted. Like, okay, I will meet the buyer here, I will meet the seller here, we will go look at the apartment, we will leave, we will talk about what they thought, and that's it, right? But these moments that throw you off course is when like there is true information that's coming out. So what I really learned about the whole space was very enriching, because the way I had planned it was like days in row. So if I'm in Boston for 3 days, I had like 10 to 12 apartments to see every day. So it was like this extensive activity that you know I had my broker plan, because that's not their general way of working either. Like with one client, so many apartments, 3 days in a row. So it was a new thing for them as well. And that kind of relationship we built over those 3 days, spending, like all the time, going to these apartments and grabbing maybe a coffee in between and lunch sometimes is first, it was a lot of fun. But second, what I got, like the kind of information and the kind of experience stories that I got to hear from them were unfiltered. I think which was the best part of doing this whole thing. Um, and now my relationship with my brokers is like it's super friendly, I would say. I haven't bought yet, right? But they still respond to me. They're still talking to me after 2 years. They know what we're building. I always like do make sure that I'm managing their expectations um, by communicating where we are in the process. But they have no real obligation to respond to me. I've never really paid them a single dollar to this day. But the fact that these people are like communicating with you and, like telling you about new things that are happening is the kind of relationship I got to forge um, during those activities. So, like while going in it, my expectations weren't great. Like coming out of it, I was like, this is, I look forward to this because it updates my view on what's happening on the ground multifold. Like I could sit here like looking at the new listings on MLS or Redfin or Zillow and try to do analysis of my own. But what that adds to the perspective is unmatched, unparalleled.
And what do you think your perspective evolves into after the activity, like something like this? I think you have done this multiple times now, I presume.
Yeah. No, I think now it is just something I look forward to. It's like a system update, you know? It's a system update. When you go out and do this, you are updated with everything that there is to know about that city, what's happening in the housing market of that city, what kind of demand, what kind of rents, what kind of everything. It's like you're upgrading from I don't know, like OS X to whatever, OS 11.
If you could take like an example of one city, maybe not Boston, and share some insights about the housing market that you kind of were able to understand what after you were there. If you could, like, what are you looking at when you are doing this activity? Maybe in terms of numbers, apart from the neighborhood and everything that we already talked about, probably.
Okay. So for example, San Francisco, right? Back in that time, San Francisco market was not doing well. The real estate prices were down about 20%. The rents were down almost 30%. Um, and while, cities like Boston and New York had recovered, their rents were at all-time highs and, the demand was full. The city was not vacant at all. San Francisco was not like that. Rents were down, vacancy was high, and a lot of trends in the city had actually changed for good. For example, we know it's the heart of Silicon Valley, right? And a lot of work that people did in that area was work that could be very easily managed remotely. So, during pandemic, when people left the city to go back to like I don't know, living in their larger homes in the suburbs or with their parents or whatever, they never really came back. A very big piece of that population never really came back to live in San Francisco because first the city is expensive. Second, they realized there was no need to. They could like live a perfectly balanced life away from the city and be productive at work like that. So the city paradigm changed, for good, essentially. A lot of the condos that I saw that were on the market were pied a terres. Like pied a terres are like second homes and third homes that people held on in the city for when they came and lived in their city or for their kids when they came to like maybe work here or whatever, right? A lot of those assets were being put on the market for sale. So, which meant that people were not looking at those things as options anymore. They just did not want it. They just felt that they could find that kind of work-life balance they wanted elsewhere for a far lesser cost, right? And when that happened, it led to like this shift in demand patterns of the city altogether. If you were talking about numbers, um, I wouldn't go so far as to speak about the specifics of the properties because those numbers like evolve with time and they've like I think they've changed pretty drastically since. But at the same time, what is a fact is that the asset values were down about 20% when on the East Coast it was hitting all-time highs. The rental yields were also down about 30% from the peak, when, on the other hand, East Coast cities like Boston and New York were hitting all-time high valuations and yields.
Okay, I think we covered how to identify a good property, and then I think we also covered how we are selecting these properties for the users who will come on the platform. Is there like a question you would like to explore which you feel is very important that needs to be discussed?
I would, I would, I would want to say like some things about how it is that we're trying to build this company and how this is really not structured in any sense as a startup. While it's a tech driven product, and while it's something that that's like new on the block, from a perspective of an investor, or from a person that comes in to analyze the space that we're in or we're operating in, is we're fairly mature, because the kind of assets that we're dealing with is fairly mature. If you think about it in a way, we are taking a physical asset and making it into an operational expense for ourselves and really productizing that, right? So it's not backed by nothing. It's not backed by something intangible. It's backed by something very tangible, very long lasting. And hence the economics here work significantly differently. And that was just a point that I wanted to put across, because the kind of narrative that gets thrown around in the space of investments and startups, and people talk about burn. What the hell is burn? Like, why would anybody project for losing money? I mean, I understand to achieve growth, but there should be some end in sight, right? We're really a space where we're making tradition meet the methods of tomorrow. So um so a lot of the metrics that we look at, and a lot of ways in which we look at the whole business, is fairly grounded, and it's not high flying like the today's startup ecosystem.
So, Vidhi, I think that was a very fruitful conversation, and hopefully that you will choose to come again, and we'll record one more episode.
Absolutely, it was a great experience, speaking about all of these things in such a consolidated manner. I've never
Right.
done that before, but yeah, would love to keep in touch and be here sometime again.